What's up everyone, it's Dennis. And let's talk credit scores. You know that 3-digit number that feels like it controls your entire financial life? Yeah, that one. We all check it, hoping it magically went up, right? Well, I'm here to tell you that getting an 800 credit score isn't some mystical unicorn. It's totally achievable. And in this video, I'm breaking down exactly how to do it fast. We're talking the best tips and tricks to boost your score and unlock the best interest rates on loans, credit cards, even your mortgage. Think about it, lower monthly payments, better terms, and more money staying in your pocket. That's the power of an 800 credit score. So if you're ready to take control of your finances and level up your credit game, this is the video for you. Make sure you hit that like button and subscribe to the channel so you don't miss out on any future financial tips. And hit that notification bell so you know exactly when I drop a new video. Now let's get you that 800 credit score. Okay, let's be real, an 800 credit score sounds pretty good, right? But why is it such a big deal? I'm talking tangible benefits here, people. First off, think about loans. Whether it's a car loan, a personal loan, or the big kahuna, your mortgage, an 800 credit score is like walking into a dealership with a giant stack of cash. You're instantly seen as a low-risk borrower, which means lenders are practically throwing low interest rates at you. We're talking potentially saving tens of thousands of dollars over the life of a loan. And it doesn't stop there. Credit cards? Forget those measly sign-up bonuses. With an 800 credit score, you can unlock the best travel rewards cards, cashback cards, you name it. We're talking premium perks, higher credit limits, and the ability to turn everyday spending into serious rewards. But it's not just about saving money and earning rewards. An 800 credit score can even make your life easier. Landlords often use credit scores to screen potential tenants. A high score shows them you're responsible and likely to pay your rent on time. So, yeah, an 800 credit score is basically your golden ticket to financial freedom. Look, I get it. Building credit can feel overwhelming, especially if you're starting from scratch or trying to rebuild after a few financial hiccups. But trust me, it's totally doable. Think of your credit score like a financial GPA. Just like in school, you don't ace every test overnight. It takes time, effort, and a solid strategy. And that's what we're going to do together in this video. We're going to break down the key factors that influence your credit score and give you actionable steps you can start implementing today. Remember, your credit score is a reflection of your financial habits. By making smart choices and being consistent, you can build an exceptional credit history that opens doors to amazing financial opportunities. So whether you're dreaming of buying your dream home, starting a business, or simply want the peace of mind that comes with knowing you're in control of your finances, an 800 credit score can help you get there. Now let's dive into the first and most important factor that influences your credit score: your payment history. Alright, let's talk about the MVP of your credit score, your payment history. This single factor accounts for a whopping 35% of your score, which means it's crucial to get it right. Think of it like this: your credit report is basically a report card for lenders. It tells them how likely you are to repay borrowed money on time. And guess what they value most? You got it, on-time payments. Every time you make a payment on a credit card, loan, or even a utility bill on time, it's like getting a gold star on your credit report. On the flip side, late payments are like getting a big, fat F. They tell lenders that you might not be reliable when it comes to managing your finances. And trust me, lenders don't like to see those. Late payments can stay on your credit report for up to 7 years, potentially hurting your chances of getting approved for loans, credit cards, and even renting an apartment. But don't worry, there's an easy fix for this. Set up automatic payments for all your bills. This way, you'll never miss a due date, even if you forget to mark it on your calendar. Most banks and credit card companies offer this feature, and it's a total game changer for building a solid payment history. I know what you're thinking. Graham, I already have a few late payments on my credit report. Is all hope lost? Absolutely not. The beauty of credit is that it's a journey, not a destination. While past mistakes can sting for a while, the most important thing is to focus on building positive credit habits moving forward. Start by making all your payments on time from now on. Remember, consistency is key. The longer you maintain a spotless payment history, the more lenders will trust you, and the higher your credit score will climb. Now, I know life happens, and sometimes unexpected expenses pop up. If you're facing a financial hardship and can't make a payment on time, don't panic. Reach out to your lender or creditor as soon as possible. They may be willing to work with you and offer a temporary hardship plan to help you get back on track. Remember, communication is key. Alright, let's talk about credit utilization. This is the second most important factor affecting your credit score, and it's something you have a lot of control over. In simple terms, credit utilization is how much of your available credit you're actually using. Think of it like this. If you have a credit card with a $10,000 limit and you've got a $5,000 balance, your credit utilization is 50%. Now the golden rule here is to keep your credit utilization below 30% at all times. Ideally, you want to aim for under 10% if you can swing it. The lower you go, the better it is for your score. Why is this so important? Because it shows lenders that you're responsible with your credit and not maxing out your cards every month. Trust me, they love to see that. Now you might be wondering, Graham, how do I actually keep my utilization low? Well, there are a few easy strategies you can implement right away. First off, pay your credit card balances in full and on time every single month. This seems obvious, but you'd be surprised how many people don't do it. Remember, even carrying a small balance can increase your utilization rate. Second, consider requesting credit limit increases on your existing cards. A higher credit limit means your utilization will be lower, even if your spending stays the same. Just make sure you're not tempted to spend more just because you have a higher limit. Finally, if you're carrying a balance across multiple cards, focus on paying down the card with the highest utilization rate first. This will have the biggest impact on your credit score in the shortest amount of time. Let's talk about another crucial factor: credit age. This one's all about how long you've been using credit responsibly. The longer your credit history, the better it is for your score. Think of it like this. Lenders want to see that you've been playing the credit game for a while and making responsible decisions consistently. A long and positive credit history gives them confidence that you'll continue to do the same in the future. Now, your credit age is calculated based on the average age of all your credit accounts. This includes credit cards, loans, and any other lines of credit you may have. The older your accounts, the higher your average credit age will be. Here's a golden rule. Never close your oldest credit card accounts, even if you don't use them anymore. I know it can be tempting to declutter your wallet, but closing old accounts can actually hurt your credit score. Why? Because it shortens your average credit history. Remember, lenders like to see long-standing accounts. Instead of closing old cards, consider making a small purchase on them every few months and paying it off immediately. This keeps the account active and helps your credit age. Another strategy is to become an authorized user on someone else's account, especially if they have a long and positive credit history. This can give your credit age a nice boost. Just make sure the person you're becoming an authorized user on has good credit habits. Alright, let's talk about credit mix. This factor accounts for about 10% of your credit score, and it's all about having different types of credit accounts in your name. Think of it like this. Lenders want to see that you can handle different types of credit responsibly. A diverse credit mix shows them that you're not just relying on one type of credit, like credit cards, and that you can manage different types of debt. So what kind of credit mix are we talking about? Well, it typically includes a combination of revolving credit, like credit cards, and installment loans, like auto loans or mortgages. Now, before you run out and apply for every type of loan you can find, remember that building a healthy credit mix takes time. It's not something you can do overnight. If you're just starting out, focus on building a solid credit history with a credit card or two. Make sure you're using them responsibly and paying your balances on time. As you build your credit history, you can start thinking about adding other types of credit, like an auto loan or a mortgage, when the time is right. Remember, it's all about gradual and responsible credit building. One important thing to keep in mind is that you don't need to go into debt just to build a diverse credit mix. If you don't need a car loan or a mortgage, don't get one just for the sake of your credit score. Focus on managing the credit you already have responsibly. Alright, let's talk about hard inquiries. These little guys can put a dent in your credit score if you're not careful. Basically, every time you apply for a new credit card, a loan, even an apartment, the lender checks your credit history. This is called a hard inquiry. Think of it like someone peeking into your financial past. They want to see how responsible you've been with credit. Now, a few hard inquiries here and there won't kill your score, but if you're constantly applying for new credit, it can raise red flags. Lenders might think you're desperate for credit, which can make them hesitant to lend to you. That's why it's important to be strategic about when and how often you apply for new credit. Remember, building a good credit score is a marathon, not a sprint. Don't rush into unnecessary credit applications that can hurt your score in the long run. Now, I'm not saying you should never apply for new credit. There are times when it makes sense, like when you're buying a house or a car, but for everyday purchases, try to use the credit you already have. If you're thinking about getting a new credit card, take your time to compare offers and choose one that's right for you. Don't fall for every flashy sign-up bonus you see and end up with a wallet full of credit cards you don't need. Also, be aware that multiple hard inquiries for the same type of credit within a short period, usually 30 to 45 days, are often treated as a single inquiry by credit scoring models. So, if you're shopping around for a car loan, try to do it within a 2-week window to minimize the impact. By being mindful of hard inquiries and applying for new credit strategically, you can protect your credit score and keep it moving in the right direction. Here's a little secret the credit card companies don't want you to know. Paying off your balance in full by the due date isn't enough to maximize your credit score. You see, the credit bureaus look at something called your credit utilization ratio. Think of it like this. You have a credit card with a $10,000 limit. You spend $3,000 throughout the month. Even if you pay off the entire $3,000 by the due date, the credit bureaus will still report that you had a 30% utilization ratio that month. Ideally, you want to keep your credit utilization ratio below 30%, and even lower is better. The closer you are to 0%, the better it is for your credit score. This might seem unfair, but it's just the way the credit scoring game works. But don't worry, there's a simple trick to beat the system. The key is to pay off your credit card balance multiple times a month, even before the statement closing date. This way, the credit card company reports a lower balance to the credit bureaus, which lowers your utilization ratio and boosts your score. Let's say you have a $10,000 credit limit, and you plan to spend $4,000 this month. Instead of waiting until the due date, make 2 payments of $2,000 each throughout the month. This way your reported balance will never go above 20% of your credit limit. Now, you might be thinking, that's a lot of payments to keep track of. But trust me, it's worth it. A higher credit score can save you thousands of dollars in interest on loans, and get you approved for the best credit cards with amazing rewards. Plus, with online banking and mobile apps, it's easier than ever to make multiple payments throughout the month. You can even set up automatic payments so you never miss a beat. Let's talk about credit limits. You see, a higher credit limit doesn't just mean you can spend more money, it can actually boost your credit score. Remember that credit utilization ratio we talked about earlier? A higher credit limit automatically lowers your utilization ratio, even if your spending habits stay the same. It's like magic. For example, let's say you have a $5,000 credit limit and you spend $2,500 per month. That's a 50% utilization ratio, which is not ideal. But if you increase your credit limit to $10,000, your utilization ratio drops to 25%, even though you're still spending the same amount. See? Simple math, big impact. The best part is, requesting a credit limit increase is usually quick and easy. Most credit card companies allow you to request an increase online or through their mobile app. They'll typically review your account history, including your payment history and credit utilization, to determine if you qualify for an increase. Now here's a pro tip. Before you request an increase, make sure you've been managing your credit responsibly. That means paying your bills on time, keeping your balances low, and avoiding unnecessary credit applications. If you've been a model card holder, there's a good chance your request will be approved. And remember, if you don't ask, you don't get. So, take a few minutes to review your credit card accounts and see if you qualify for a credit limit increase. It's a simple step that can make a big difference in your credit score. Alright, let's talk about a clever strategy to boost your credit score, especially if you're just starting out or rebuilding becoming an authorized user. Now, this isn't about getting a free ride. It's about leveraging the good credit history of someone you trust, like a family member or close friend. Here's how it works. When you become an authorized user on someone's credit card, their account history, including positive payment history and credit utilization, gets factored into your own credit report. It's like getting a crash course in responsible credit card use without actually having to manage the account yourself. Now, a word of caution. This strategy works best when the primary cardholder has a long history of on-time payments and keeps their credit utilization low. If they're constantly maxing out their cards or missing payments, being an authorized user could actually hurt your credit score. So, if you're considering becoming an authorized user, have an open and honest conversation with the primary cardholder about their credit habits. Make sure you're both on the same page about responsible credit card use. Remember, this is about building a solid credit foundation for yourself. Now, not all authorized user accounts are created equal. The age of the account plays a significant role in boosting your score. Think of it like this. A credit card account that's been open for 10 years carries more weight than one that's only a year old. Why? Because it demonstrates a longer track record of responsible credit management. Ideally, you want to become an authorized user on an account that's been open for several years and has a spotless payment history. This shows lenders you're trustworthy and can handle credit responsibly, even if you haven't been building your own credit for that long. Another factor to consider is the credit limit on the account. A higher credit limit generally translates to a lower credit utilization ratio, which can positively impact your score. However, don't get too caught up in chasing high credit limits. The most important factor is still responsible credit card use. Remember, becoming an authorized user is a stepping stone, not a magic solution. It's a fantastic way to jumpstart your credit journey or rebuild your credit history, but ultimately, you'll want to establish your own independent credit accounts and demonstrate responsible credit management over the long term. We're constantly bombarded with information in today's digital age, and sometimes mistakes happen. Your credit report is no exception. Errors on your credit report, whether it's a misspelled name, an incorrect address, or a wrongly reported late payment, can significantly impact your credit score and your ability to access financial products. Think of your credit report as your financial resume. Just like you'd proofread your resume before submitting it for a job application, you need to regularly review your credit report for any inaccuracies. You'd be surprised how often errors occur, and catching them early can save you a lot of headaches down the road. The good news is that you're entitled to a free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, every 12 months. That's 3 free opportunities to ensure your credit history is accurate and reflects your financial responsibility. I recommend spreading out these free reports throughout the year. For instance, you could request your Equifax report in January, your Experian report in May, and your TransUnion report in September. This way, you're monitoring your credit more frequently and increasing your chances of catching any errors early on. Alright, so you've spotted an error on your credit report, now what? The first step is to gather any supporting documentation that can help you dispute the inaccuracy. This might include bank statements, credit card statements, or any other relevant documents that prove the information on your credit report is incorrect. Next, you'll want to contact the credit bureau directly and file a formal dispute. You can do this online, by mail, or over the phone. Be sure to provide specific details about the error, including the date of the inaccuracy, the name of the creditor, and any supporting documentation you've gathered. Once you've filed your dispute, the credit bureau is legally obligated to investigate the matter within 30 days in most cases. During this time, they'll contact the creditor who reported the information and request verification. If the creditor can't provide evidence to support the accuracy of the information, the credit bureau is required to remove the error from your credit report. Disputing errors on your credit report might seem like a daunting task, but trust me, it's worth the effort. A small error can have a big impact on your credit score, so be proactive and take control of your financial future. Congratulations! You've reached the end of this guide and you're well on your way to achieving that coveted 800 credit score. Imagine the possibilities: lower interest rates, access to premium credit cards, and a brighter financial future. It's all within your reach. An 800-plus credit score opens doors to better loans, lower interest rates, and financial freedom. Which strategy will you try first? Let me know in the comments. Remember, building excellent credit is a marathon, not a sprint. Be patient, stay consistent with these strategies, and you'll reap the rewards for years to come. Want more financial hacks? Subscribe now and turn on notifications to never miss an upload. And hey, as a bonus for sticking with me through this entire video, I'm giving away my free credit score guide. It's packed with even more tips and tricks to help you achieve your financial goals. Just click the link in the description below to download your copy today.